All right, everyone. Well, we're going to break down the trades for today. I am really impressed. MLGO, this one has continued higher. Not my biggest winner of the day, but green on MLGO, green on RGS, green on VLCN. These three stocks each made huge moves off the low. MLGO, the low today was about $11 a share. It's at $19.90 right now. VLCN, that one went from about $6 up to over 12. RGS, this one was crazy. I was really impressed. It peaked at nearly 300%. It's pulled back a little bit off those highs right now. And, I'm sitting here on my traveling trading station feeling really grateful for a solid green day. My traveling trading station, by the way, consists of my laptop, which is front and center right here, and then I use two of these little USB monitors. You can see how skinny they are. They go side by side. I pack them in my carry-on. So I have the laptop, and then I have these two monitors right next to it. And that's my whole trading station. And I can bring this with me anywhere I go. And I love it. These monitors, by the way, are made by Asus. And they're kind of expensive. They're like 200 bucks each. Kind of expensive for what is obviously a very small monitor, a skinny monitor. And they're a little fragile. You don't want to drop it too many times. They will eventually break if you do that. I've learned the hard way. But anyway, so we're going to break down my trades here from this morning. I think today's one of those days where there's really a challenge of like, how hard do I push it, right? Do I really dig deep and try to go big, or do I get cautious? I saw some people hit max loss today, and that doesn't surprise me considering the level of volatility we had on some of these stocks. I also saw some of you guys report that you had the best day you've had in months, years, or in your entire career. I saw one person, actually two people were up over $20,000. I saw just those ones stood out to me. I saw someone mention they were up 10,000 today on these trades. So, it's great to see that, but one of the challenges with these is when they start to get really extended, it can feel hard to figure out where's the safe place to buy. And if you miss that early entry, then it's like, man, I can't break the ice this high, but it goes higher and higher and higher. And then you start to feel FOMO, disappointment, frustration as you're kind of missing the move. So let me walk you through how my day started. So I sat down at about 6:45, pulled up the scanners, and based on my recap yesterday, I said MLGO is definitely going to be on watch. MLGO yesterday squeezed up over 300%, phenomenal move. It sold off, and I actually noticed a 75,000 share seller walking the price down after hours. They were putting their order on the offer and then pushing it down more and more and more. So I was like, oh, this isn't good. Someone's kind of like walking this thing down. But right into the end of after hours, it got sort of squeezed back up here. And then pre-market, it didn't do that 4 a.m. spike and then fade. It just kind of held this level. So my first trade was actually right here as this broke over 1250. I got long at 13 on just a momentary micro pullback, and it pops up to $15 a share. First trade of the day, 7:15 a.m. I'm up 2,000 bucks. So that's how I broke the ice today, and I was very pleased with that. But then this pulled back, and it actually dipped down quite a bit here before this kind of somewhat surprising rally into the open where we bounced from 12 all the way up to 19. And it's actually currently halted at $19 a share. So my P&L on the day right now is $4,542.97. Not bad for the traveling trading station. Not a home run, but darn close to the $5,000 daily goal. And I feel good about that. And I never went red today. Biggest loss today, maybe $500. So risk was really well managed and accuracy was also pretty solid. MLGO, I did not participate in this leg of the move. I just sort of felt like the problem here, and we'll watch this when it resumes in about a minute, but you're going to see huge spreads. And the problem with trading stocks with big spreads is that you could buy and then instantly you're down 70 cents a share. You do that with 2,000 shares, it's a $1,400 loss. And 2,000 shares is not even a big position at all. You do that with 5 or 10,000 shares and things are getting scary real quick. So, that's my challenge with these types of stocks, and it was similar to RGS, which we'll look at in a second. But let's watch this resumption on MGLO. So We halted at 990, as you can see right here. And the last print that went through was at 10, 20, and 36 seconds. So the resumption should be in about 10 seconds here, if it's a 5-minute long halt. And it probably will be. It is gapping up, but not a ton. Well, it is showing a little higher. So right now we're showing 2050. So let's watch. Is this going to resume? Okay. So we're resuming here 2050, 2099. Very strong resumption, but all of a sudden, do you see how it popped over 21 and now we're back at 2050? This is weakness. People now bail out. They're like, uh-oh, I got in a little too high. So just right there, there's someone that could have bought at 21 and then stopped out at $20.30 for a 70-cent loss. There's someone who might have just added back for the break at 21. And now they look at the chart and they're like, wait a second, am I in right here? Like this is the top, this could be a top candle wick, a topping tail after 5 green candles in a row. And then it could come back down. So like you're positioning yourself so high on this that there's a lot of risk. 2278 is the halt level. Now, if there's someone who's short, they could get squeezed out and they could get forced to cover. And that's kind of what you end up banking on is maybe someone is going to be covering this, buying 30,000, 40,000, 50,000 shares, and they're going to start sending it to new levels. And then other shorts stop, longs jump in, and that's what creates what we would call a short squeeze. But look at that. Look at that right there. So see that drop? So watch down here. So I'm going to do a quick dip right there at 1884. I'm buying just a small position of 250 shares. Here's the reason. I like buying those extreme flushes because it's like a 2-point drop. Now, usually those will pop up really quickly. They'll bounce right back up. This one might not. It's showing a $15, $16 resumption. We'll see how it looks. So right now, my 250 share starter position, the risk is managed. I can tolerate the risk on this. But what will typically happen when you get a flush down like that or you get a halt down like that is that it'll open either flat or sometimes it even opens higher. And when it opens higher, you can get a nice bounce headed back up. So we'll see where this resumes. We've still got 5 minutes now. We've got 5 minutes to wait. So right now it's showing $17 resumption, which would certainly be a loss, but 250 shares is a good starter position for me, so I can work with this. All right, so let's stay tuned on this. We'll switch over and watch, we'll look at RGS now for a second. So RGS was the next stock that I started trading. And the thing with RGS that was really interesting was that this is a stock that's easy to borrow. So when it first started moving down in this area here, I said, you know, guys, it's easy to borrow, and you can see right here, easy to borrow is identified right there with the E. So I was like, it's easy to borrow. I don't know if I can trust this. What I know about stocks that are easy to borrow is that typically you have a lot of short sellers that will just hit it to the short side very quickly. And unfortunately, you end up getting these topping tails, you get a lot of chop. Now, to make matters worse, RGS was not on short sale restriction. If it's on short sale restriction, you can't hit the stock on the bid. You can only short on an uptick, which is obviously going to make a bear raid harder to conduct. A bear raid is when short sellers hammer the bid, just hammer, hammer, hammer the bid, and drive the price down. But you can't hammer the bid when a stock is on a short sale restriction. But RGS isn't on short sale restriction. So it's easy to borrow, even though the float's only 2 million shares, which is very unusual. But usually, for me, that's a real sign to be cautious. So I saw it and I was like, topping tail, topping tail, topping tail, topping tail, topping tail, topping tail, topping tail. So I'm seeing all these topping tails and I'm watching it. It's popping up and flushing. It's popping up and flushing. And I'm thinking, I can't trust this thing for a second, right? It's just, it's easy to borrow. It's not clean. And that starts to pull away here up to 9. And I'm like, okay, I like it. But wait, there's a problem. You know what the problem is? Let's check the daily chart. The daily chart shows that our 200 moving average is at 10 bucks right here. So I'm like, now that it's finally coming up to 9, we're at the daily 200. We're at resistance. So now this isn't going to work either. So now at this point, I'm thinking, all right, now I've got to wait to see if it can prove itself. So it ends up more or less, well, let me go back onto the 1 minute chart. And hold on, just got to check the time on MLGO. So 10:27. So this should resume at 10:32. So 10:32 and 33 seconds. So that's where I'm going to watch resumption. Right now showing 17.98. So down about $1 a share versus my 18.84 entry. Okay, so kind of going to manage this. We'll watch around this level. I may end up, look, I may end up taking a loss on it, and that's fine. I may also end up adding to the position depending on where it resumes, because what I'm looking for is the bounce back up. So I'm just going to put this, let's see, so 32, what's the time? Yeah, so right around 32. Okay, so we'll watch this in a second. So RGS on this one, it had resistance at 10 right here. And so I was like, yeah, I can't trade this yet. But when it broke 10, from once it was over the 200, then at that point, I was like, okay, game time. Now it's time to step up to the plate. Now it was a little bit more expensive at that point, right? Now I'm trading it up around 12 and 13. And what I found was on this one, you had like one big green candle and then just sideways. And then a big green candle and then kind of sideways. And then a little chop with a topping tail and then sideways. But then at the open, we did get a couple nice moves. So I traded it actively through the range. I was able to do well on it, but it wasn't the easiest thing that I've ever traded. All right, so now we'll come back to that in a second. So let's watch MLGO here. All right, so we're showing right now 1793, which is a little weaker than I would have liked. I would have preferred a flat resumption. So if it goes for another halt down, I'll just take the loss on it. If we can spring back up, let's see if we can reclaim 18. So I add down here, and then when I add down at that level, I want to see it bounce pretty much immediately. So we've got a bottoming tail there. My average is 1820. There's 1814. So I'm going to sell the whole thing and manage the risk against that trade. So I'm basically out. Small loss, 6-cent loss on 500 shares. And that's fine. For me, I'm okay with that. I take a starter position into that weakness, and this trade didn't work out the way I wanted it to. The way I wanted it to work out was that it was going to false halt right here and spring back up. But because the risk of an actual halt is real, I took starter size, small size, 250 shares. I could tolerate the loss. It's no big deal. It opens lower. I add. Whenever I add, I set my stop basically at that price. So right here, when I'm adding down here at about 1750, my new stop is 1750. If I average down on a position and it goes back lower, I don't want to lose more money because then I'm throwing good money after bad. You don't want to just keep averaging down, averaging down, averaging down. So with a starter position here, I'm okay adding here, but now my max loss on the position is here. It pops up, it gets over 18. Okay, that looks good. And it sort of stalls out and it's not ripping back up higher. I'm just going to get out. And by adding off of that dip, I was able to reduce my loss and manage my position around that, which is fine. So that's a typical trade with a starter position. So, in this case, it went the wrong way, lost a little bit, but it's not a big loss. It's manageable. And if it ends up going up later, that's fine, but it didn't do what I thought it would do. So it was the right move to exit. All right, so let's go back to RGS. All right, so now if I had taken that trade with 2,500 shares, well, then you're talking about a little bit more stress. All right, so RGS, what was kind of crazy about this one, at the open, we get a halt up, and it resumed, and look at the range on this candle. Look at the range on this candle. I mean, this is like 2-point candles in seconds. This is intense. So these are trades where you do this going the wrong way, and it's going to be really painful. So, for me, on RGS, I got some nice trades once we broke over 10, right? So this was our $10 spot. We broke over 10. I missed that initial pop, but then I got this one right in here as we started to pull away. I got a little bit on this. Then we got a jackknife, and it came back up, broke the high. I like buying the dips after those flushes. So trying to buy off support there, catching the rally higher. And in total, you can see I didn't crush it today. Only $2,300 on RGS. 1900 on MLGO. I was talking about this today. I mean, part of it is I'm on the traveling trading station. I'm not trying to do anything crazy and take a lot of risk. This hasn't been a phenomenal month for me. So, I'm obviously green and I've done well, and you guys have seen the recaps, but, um, I'm trying to be a little cautious here because one of the things that I feel like I'm managing in my trading are my emotions. Because when I have a really big red day trading, it weighs on me. I feel disappointed in myself, I get frustrated, and it affects the quality time that I get to spend with my family the rest of the day because I'm still dwelling on the loss. It's hard for me just to like let it go. But if you take a couple steps back and trade a little more within your comfort zone of share size and risk, the emotions become smaller. Now, it's important to test your range and to push, and stretch, but for what it's worth, I stretched hard in 2020 and 2021 and 2022, and I got paid really well for that. And I kept pushing and stretching hard in 2023, but the market wasn't there, and I didn't get rewarded very much for it. In fact, I incurred a lot of stress. And so for 2024, I was like, you know what? Let's try to tighten up the risk. Let's try to scale things down a little bit and be a bit more moderate. And what's incredible is trading with smaller size and trading a bit less, I've actually made twice the amount of money that I made last year at this time. I'm up double. And it's from focusing on base hits, staying calm, cool, collected, just being more laid back. It's kind of surprising. You would think it's the opposite. And that's why I got myself so frustrated last year because I was just like, wow, why is nothing working? This is insane. I'm I'm really trying hard to do well and I'm just not getting anything for it. And I'm not, it's an exaggeration because I had a good year in the grand scheme of things. But anyways, so this year I'm taking a little bit of a different approach, and I have had a few bigger red days this year, which, because I am, after all, only human, and I do fall victim still at times to that emotional hijack and frustration and disappointment and so on and so forth. But I'm trying to hold it together. So I don't have huge gains today. I would have had to take a higher level of risk than I was comfortable. RGLS, it was choppy at the beginning of the move, easy to borrow. And then I think some shorts got trapped and we started to get some nice moves. But even then, it was pretty whippy. See it popping up right now. It might halt up. But the problem with it now is at this price range, look at how fast it's moving in terms of like just the spreads. 1763 on the offer, 1740 on the bid. Halt levels 95. Back to 1720, 20-cent spread, 15-cent spread, 16-cent spread, 20-cent spread. And then all of a sudden, like that's what happens. A bunch of sell orders go through and you're down to 1714 on the bid. A couple more people panic sell and you're at 1710. And now 1697. And you're like, I was just buying this at 1750. What is going on? What is happening? And that's how you go from having a nice green day to giving it back. And it doesn't take much. It really doesn't take much to give it back. It can happen so fast. And I'm telling you, it is infuriating to watch that happen. So, maybe this is a good time to talk about the concept of selling winners too soon and holding losers too long. So many of us fall into this trap where we get these like small little trades, small green trade, small green trade, small green trade, and then huge loss. And I think part of that is because as active day traders, when we're buying stocks that are high, we're like, ugh, it's very easy for momentum to shift and we get nervous. And I think that this comes back to asking yourself whether or not you truly have a good entry. Because if you truly have a good entry where you're buying with a very well I'm sorry about that. These headphones turn off every now and then. Um, they're very comfortable and they're great for travel, but they just turn off every now and then. So if you really have a good entry with a very clear and determined max loss, then um, those are the entries you want to try to hold a little longer. if you can, and try to squeeze as much as you can out of that trade, and then have the patience to say, all right, I got to wait for the next setup. So now I want to play something for you. Earlier today, I talked about how to differentiate the front side of a move from the back side of a move, because this is something that a lot of traders struggle with. I'll probably break this concept out into a full-length episode, um, but just in the meantime, I'll play this for you, and I'll see what you think of it. So let's see. So I'm going to put this up on the screen here, and let's see if it'll come through. Let's just test this out. I think I just have to change the audio setting on this. So, all right, so let's see if this plays. Down here, this is going to be my recap for today. MLGO, this thing went up almost. Oh, that was MLGO. That's not the one I want to show you. So that was the recap from yesterday. What I want to show you here is my video that I recorded earlier this morning. This is it, front side versus back side. Okay, so this is the area right here where we have to make the decision of, is this a pullback where I can buy for the next leg up? Or is this the beginning of a reversal that's just going to keep lower? So how do I make that decision? Okay, so stepping back and getting context, we've got a stock that is currently up. It's actually down 5%. And the reason is it's down 5% is because yesterday it closed very high right here. So we're still actually down a little bit versus yesterday's close. But off of the low here, we're up like 40%. So we've definitely made a move. This is a stock that has a history of making big moves. We're positioned well on the daily chart, no issue there. Not really any fresh news, to be honest. The catalyst that some people were looking at was a 13G, but this was filed 5 days ago. Someone bought 700,000 shares. They're now rich. They were probably already rich beforehand. Anyways, so right here, these are the things that I look at. We have a stock that just made a really nice move, but what's a warning sign that this might not be a nice pullback? High volume red candle. All right, so the highest volume candle of the day is actually red. And I was in it during that candle as it formed. I was buying as it broke 15. And the reason I did that was because I was already in from down here. I had a nice trade on this micro pullback, and then it pushes higher. So I took a little scalp trade for the break of 15, and it pushes all the way up to a high of almost 16, and then a ton of volume went through, and it's flushing back down. So now what does the chart look like? Topping tail. You've got this big topping tail candle. What we know about the formation of these candles is that a topping tail is bearish because although the price squeezed up, the sellers pull it right back down. So it comes back down like this. A bottoming tail is bullish. Now in this area, if we're seeing a little bottoming tail right there. It's a small one, but the low of this current candle is 1372, and we're at 1430 on the ask right now. So the other issue with this stock is that we've got bigger spreads, 1370, 1385 by 1414, right? So when you have a stock that has big spreads, you have to be a sniper with the way you trade it, because if you make a mistake, you could easily be down 50 cents a share very quickly. So my whole strategy is to trade momentum. I want to trade with the trend. But trading with the trend can include buying a little bit of a pullback and riding that wave for the next leg up. And I know a lot of traders will ask me, Ross, I don't understand how you kind of differentiate a pullback from something that's just going to go lower. And that's what I want to explain right here. So for me, this topping tail candle with high volume red, a high volume red candle in the same period, this is an indicator of a true reversal. Now it's true that sometimes we will hold here and we'll rally back up, but if we do, we often end up with a double top, and it still is unable to break that level, and then we pull back. Now, if we end up with a double top and then consolidation here, that's called a cup and handle formation. So think of this as a little cup of coffee, that's the handle, and then when you get a lot of coffee, you get jazzed up and bam, you get a big breakout. So cup and handle, that's potential, but it takes a while to form. So I'm not going to take the risk of buying down here because of the risk of number one, a double top, and then a fierce rejection right here. And I'm not going to buy down here more than anything because of the concern that this high volume bar has now scared off a lot of long bias traders. So all the long bias traders out there, me included, when we're sitting down, we're thinking about taking a trade, we're asking ourselves, how can I buy the stock with as little risk as possible, right? We don't want to take an exorbitant amount of risk. We want to take a trade where we feel like we've got, a 90% chance of making money. We want to feel confident. And so the things that we look at are, well, is there any warning sign? Is there any caution flag here? High volume red candle, big top, big tail. That's the one that I see right now. The other thing that I would add to this is that, let's see. And by the way, RGS is easy to borrow, which is a little unusual to see it moving up this much. It's up to 42%, but easy to borrow is a bit of a red flag for me on that one. MLGO is not easy to borrow, so don't have to worry about that. All right, so back to MLGO. So if we look at the 5-minute chart on this, the 5-minute chart shows that we also had a large topping tail yesterday, and that literally marked the high of day. Now, it wasn't on high volume, but the shape of the candle is similar. So traders are very sensitive to those kind of patterns. You see, the last time it rejected on a similar shape. We're seeing that right here. We're sort of close to a double top. Close, within 30 cents or so, 40 cents. So close enough. So the combination of being close to a double top with that high volume red candle was enough to say that's not going to be safe. But let's back up for a second and look at this on the 10-second chart. And you can look at one of my first entries. So right here, we get this squeeze up to 1360. And I was actually already watching it. And the reason I was watching it was because, of course, this had made a big move yesterday. And I was watching this 1255 area. So I was kind of watching right in here to see if this wedge would break. So we had support right in here. And usually when you have a stock that makes, a 350% move on the prior day, you have traders who are short, who are kind of hanging tight. They're barely holding on. They're swing trading it from the previous day. They're nervous. And if it starts to spike, they might jump right out. When they jump right out, they're buying to cover that position. You also have long traders who maybe didn't trade it the previous day, or who did but want to make a little bit more money on it, and who are watching it really closely for that next opportunity. So you have a lot of people still watching the stock for continuation. As it starts to break 1250 right there, I actually took my first trade at 1250. It pops up here. It then does a micro pullback. So this micro pullback right here, this I thought would be a place to buy, and I added there. High volume green candle was the first candle. Another green candle was the second. Yes, it's a doji, but it's got a bottoming tail. So although it dipped down, the buyers pulled it right back up. And then I was looking for that first candle to make a new high. When that candle did make a new high, volume was increasing. So then when we came up to 14, I got another micro pullback right at 14, and I added for the break of 14, and then it shoots up to 14.50 to 15. And then it does a little dip there, and I added 15. Volume is increasing, and it's looking great, and it squeezes here up to 16 nearly, and then all of a sudden a huge sell order goes through and it dumps. And then that candle turned from green, looking great, to red. And at that moment, I was like, uh-oh, this is not good. That's it. It's kind of a ruined chart at this point for the time being. So I'm going to step back. I'm going to wait. And, we may get a chance where this resets and it looks good again. But the 1-minute chart is now kind of broken. So when we have that 1-minute chart that's broken, now I've got the high volume candle, so now I don't want to buy in here. Then you get the MACD crossing over down here. Then at that point, I start looking at the higher time frame of the 5-minute. Well, maybe we'll have a 5-minute chart that's, pattern that starts to form. It could be a similar pattern of a green candle, a couple of red candles and then a move back higher. But we do have the similar issue where the 5-minute chart has a higher volume red candle. Traders are going to be a bit cautious about that. It's not something they love to see. So higher volume red candle there, a little pullback, then, maybe a push higher. Mm. All right. So I think you kind of get the idea there. Hopefully that conversation there was interesting for you. Um, my kind of I understand a lot of traders struggle with this sort of is this a pullback or is this just a reversal? And not knowing how to differentiate the two. So if you found that interesting, let me know. I can expand on that topic in more detail. Um, anyways, right now, sitting 4,500 on the day, green day, and I'm not going to overstay my welcome. I'm maybe leaving some money on the table, but I'm walking away with profit in my pocket. And my last two trades, anyways, were more or less break-even trades. So there's no reason at this point for me to feel like I should keep pushing too much harder. But look, the market is showing some strength right now, so this is good to see. Tomorrow, I'll be back at home, back at my, back in my office and everything else. So those of you guys that want to do a 2-week trial, join me for the rest of the week. Trade side by side with me. Check out the scanners, the charts, the software that we've built out. You're welcome to do that. There'll be a link posted in the top of the comments and in the description. So I'll see you in the chat room bright and early tomorrow morning. I hope you guys have a great rest of the day. And I thank you, as always, for tuning in. Hope you hit that thumbs up. I hope you subscribe to the channel. And hey, if you haven't already heard this, let me remind you that trading is risky. My results are not typical, and there's no guarantee you'll find success. Whether you trade with me or you learn on your own. So please manage your risk, practice in a simulator before you put real money on the line, and I'll see you guys here streaming bright and early tomorrow morning.